Hemang Jani also joining us on the show right now. Hemang, now that the rate cut cycle has officially begun, what do you think are the sectors which are best placed back home in India? Because in the last few cycles, we have seen NBFCs had done very well to begin with. Do you think this time also we'll follow suit and we are favorably placed when it comes to the NBFCs?
Yeah, good morning. So clearly, what we are saying is that large part of this, rate cut anyway was known and pretty much discounted both in India and US, and that is what you saw as a reaction. Now, coming to the point that what are the sectors where we would be favorably placed? So I think clearly in the entire market there are two things which are happening. One is that the companies which are high growth or where people are more confident about the growth, though the valuations may be on a higher side. I think those stories will continue to participate. Something like maybe a retail story, exchange capital market related stories, two wheelers, airlines. So I think that theme continues to remain as it was before this rate cut. But as a part of the sector rotation, we saw that banks and NBFCs were in action. In fact, NBFC was in action even before that. So I think you might see some more upside when it comes to the banks, maybe some of the metal companies. So I think as a part of the rotation, you will see these two themes play out well.
Morning, one can't ignore the kind of move we witnessed in the IT sector yesterday. Be it large caps, mid caps, across the board, that selling pressure was evident. What is this a sign of? And do you believe that there are any lucrative buy ideas as well within the space?
Yeah, I do think that this was just a sort of profit booking or maybe a little bit of a sector rotation kind of a play. I don't think there is anything incrementally negative that one is really talking about. In fact, post the quarterly numbers, post some of the companies indicating that some of the verticals are showing revival, people have got more positive on the sector. And within the space, we like something like HCL Tech. We do like LTI Mindtree, which actually was sounding very positive on the growth forecast going ahead. Some of the mid cap plays also we like something like Mastech, which has not performed that well vis-a-vis some of the other mid cap companies. So we have a positive outlook on some of these names.
Okay, so HCL Tech, Mastech, these are some of the names that you could watch out for if there's a further dip on the IT index the way we saw yesterday.
Hemang, do you think the next lap of the rally is going to be led by banks? That rotation is already at play. It's a global rally we're part of, and purely because of the weightage as well the bank nifty has, that's also going to propel the markets up in any case, inevitably.
Hey, Aisha, I think we have seen big underperformance almost for 2 years from the bank nifty and the banking stocks. And within the entire sector, you have NBFCs, you have insurance and capital market related play. So there is a different interplay when it comes to capital market play or insurance and NBFCs versus the pure banking. And I do think that given the stark underperformance that we have seen, there is a case for some sort of outperformance, and more so because by and large the performances have been good, and this entire issue of the banks not being able to raise the deposit. I think over a period of let's say next 3 months or so, you will see some improvement over there. So I do think that it makes sense to go with something like a ICICI Bank, State Bank, Axis Bank at this point because of the valuation comfort versus the overall market.
Okay, so you're saying don't go with the likes of ICICI Bank, Kotak Mahindra Bank, etc. at this point of time, right, Hema?
I'm saying it makes sense to go with these names because they have actually delivered on the quarterly numbers and the valuation comfort is much higher versus many other pockets of the market.
So it does make sense to go to some of these banks because the valuation is comfortable and there hasn't been big disappointment as far as earnings go. But Hemang, talking about the power sector a bit more, because NTPC, as we pointed out, will be in focus on account of that DRHP. Power grid is in focus on account of order win, IREDA, wherein that QIP approval has also come in. What within power would you still recommend as a buy?
So I do think that this entire, renewable energy, green energy story is at a very initial stage of the, entire, growth phase that one is really looking at. And though these stocks have gone up quite a lot for something like an NTPC, where if you see the, subsidiary filing the DRHP and if subsequent listing happens, we have seen what kind of response these days the IPOs are getting. So there is going to be a certain amount of excitement because of that. Tata Power, because of the kind of solar module that they have, gone into and the overall growth prospects that one is really looking at, this can become a very big story over the next 2 to 3 years. But yes, what I would like to say is that when it comes to renewables, green energy, you need to have a certain amount of allocation. You should not go whole hog and try to get into anything and everything which is there and there is an excitement. So one needs to be little more careful, but the story overall looks quite promising.
Hemang, what's your view on the alcobev industry and any top bets there?
Clearly, this Andhra Pradesh, if the government finally goes ahead with that move and allows some of the private players to participate, that would be surely a big trigger. Similar kind of reforms are also being seen in Karnataka, and some of these states contribute almost about 4 to 7% of the total sales of the large liquor companies per se. Also, when you look at the performances of something like United Breweries, Redico, Khaitan, even United Spirits, the volume growth in the premium segment continues to be very high at about 7 to 9%. Also, we had this news that on the molasses side, the government is looking to undertake more reforms, which would make the cost more effective for some of these companies. So, on an overall basis, very positive outlook on the spirits companies per se. I think United Spirits, Redico, Khaitan, United Breweries, all should be part of the long-term investment portfolio.
Meantime, Hemang, just curious to get in your take. Aisha flagged off Nazara Technologies, and given the fact that there is that 900 crore preferential issue, it's one of the largest fundraisers the company has undertaken. And in the year gone by, I've lost count of the number of acquisitions that have taken place. Do you track the company, and what's your outlook on Nazara Tech?
And I don't track the company in detail, but what is coming out very clearly is that some of the companies in this particular, gaming zone have started doing well. If you look at Nazara's recent quarterly numbers, after a long time, we have seen a significant improvement. On a quarterly basis, company reported a 24 crore of profit. Also, on the poker side, they have done acquisition and couple of more are in the pipeline. So, because of the fundraise and because of the niche segment that they are participating in, there is a case for a short-term 10-12% kind of an up move. But since these are high beta plays, I would avoid taking a very long-term view at this point of time.
What's the view on First Cry? A couple of initiations today. Morgan Stanley initiated with an overweight target price of 818. Bank of America initiate buy with a target price of 770 rupees a piece. Quite a bit of a niche play, this one too.
Yeah, I do think that on that space there are interesting upgrades that are coming through, and many of these companies have started delivering much better set of numbers. So you could look at some of these companies, but my overall sense is that rather than trying to find newer emerging stories, it would make sense to be with some of the well-known, well-discovered stories which are available at far better valuations. Something in the financial space, something in the commodity space. I think that is where the overall risk reward is much better.
Okay, fair enough. Meantime, Hemang, curious to get your take as well on the entire auto space. Given the kind of latest brokerage notes as well that we've seen come out today, there's an upgrade on Tata Motors from MK. How are you looking at auto as a sector?
So we have been very clear about the auto space. One pocket was two-wheeler. Also, partly because of the listing of Ola, we had seen a very massive re-rating come through for Bajaj and Hero and TVS. So I think if there is any small correction over there, that is one space that we would be very positive on. We would avoid Maruti, given the fact that the company has not been able to show any meaningful growth. And even the festive season doesn't look like there is any major positive surprise per se. However, the hybrids and all, they are doing well. But I think the valuations and the positive triggers are clearly missing when it comes to Maruti. Same is the case with Tata Motors. I think though you may see a technical pullback, but overall, I think large part of the story has already played out. So we would avoid some of these names at this point.
Okay, that's an avoid coming in on some of these stories within autos. But Hemang, good to have you on the show. We'll let you go on that note.
If you like this video, then like, share and subscribe to ET Now.